everyone. Okay, today is 7th of July 2024. It is around 9:17 p.m. in the evening. Okay, for this week, we will be talking for week number 28 of 2024. Okay, so let's start. All right, before we start with the news that we will be having this week, I want to talk a bit on the last week data because last Friday, there was there was some important things going on already. Okay, I think hang on, let me bring some more people in. Just a minute. Okay. All right. So last Friday, as you already knew, right? We have an unemployment rate. Okay, the more important one last week was, I think, it's an unemployment rate. All right. Okay, hang on. Let me show you in the line chart. So as you can see from the screen, right, the unemployment rate have been hovering around or lower than 4% for quite a while, actually. All right. So basically, they are really this. You have it managed to really stay below 4% since somewhere in 2022. So it's for the past 2 years that the unemployment rate was kind of going sideways in a way. But by late 2023, basically you know why, right? Because of all the banking crisis, all those stuff. Since then, actually, the unemployment rate start to show the signs of higher high and higher low kind of condition, right? I'm sure you can see. So since middle of the 2023, they are starting to show some signs of weakness already. All right. So you can see that but they didn't manage to break above to 4%. But you see, they are currently going above 4% already. This is I would say this is a very dangerous kind of signal. All right. So if the unemployment rate really rise, is to show that there will be a very likelihood of a recession is along the way coming up. Okay. So there's a way to so-called calculate the recession. So using this unemployment data, they call it Claudia-Sham rule. All right. So what it does is that basically they have a bit of like a calculation, right? Calculation. So something like what we call it a moving average, right? Moving average of that unemployment rate. Okay. So what basically they did was that, okay, you can see how they really calculated out here as well. So basically they take an average lah. All right, they take an average, right? Basically like a moving average like that. So if the number, right, if the number of this Claudia-Sham rule is rise more than 0.5%. Okay, it rise more than 0.5%. Is kind of like I would say it's 90 plus percentage. It's possible that inflation will follow along with it. Okay, so we are not exactly 0.5 yet. We are basically only at 0.43. So there's a bit of sort of like major warning there going on already. Okay, so if let's say that if an unemployment rate continue to rise, sooner or later this number will definitely will be rising more than 0.5%. Okay, so please be aware of that. And from the past that it was from the past sort of like a study, it almost 90. Is as per the research, it was almost 90% plus. It is followed by the recession. Okay, so we are almost there already. So I think it's as per what we have predicted so far, right? I think we are going into major downtrend possibly. All right, by 2025, somewhere in the 2025. Okay, I was expecting somewhere in 2024 quarter 3 and quarter 4. Maybe this one is a little bit too early. Okay, maybe they will drag somewhere around to that period. Okay, so please be aware of that. I mean, it is good for all of us to since we roughly know what is going to happen, right? So we can do our arrangement accordingly. Okay. When the recession hit, okay, what do you think is going to happen? Of course, the jobless rate will be very high. Our job security can be challenged, right? This number one. Number two, a lot of asset price can fall. All right. Especially stock market, right? And the second thing is, of course, home prices. And moreover, home price, the buying of a home shouldn't be like take it lightly. You should be considered at least minimum 3 to 6 months, this kind of stuff. So my point here is that if you are thinking of buying condo or something like that. I mean, nothing 100%, but you know, it's not very a good time for us to buy for this year and next year, in my opinion. Okay, somewhere later part of next year, maybe by then that might be a good time. But as of right now, it's not really a good time already. So you know, I'm sure you know what I'm telling right now already. So there's a little bit of like very challenging periods coming. Okay. Okay. So even though the challenging period is coming, of course, you know, nothing is as best it is because as bad as it is because, you know, there are ways for us to, you know, make money out of it, even if we are in the recession. Okay, there's some studies that I would like to bring to your attention. Okay, so basically we have like a three phase that we are normally sort of like studies, right? Studies. Okay, so number one is like, for example, we got three phase. All right, we got three phase of everything is based on the risk. Rate hike and rate cut kind of like a cycle. So you can see we have like what you call it phase one, phase two, and phase three. So basically, phase one is somewhere stuff from 2022. All right. So they have been increasing rate, right? So we have been telling, okay, actually the increasing of rate is like there's a two kind of impact, like immediate impact and the actual impact. Okay. Sometimes immediate impact and actual impact may not be the same. You see, when the when the rate hike was going on, the market didn't really go up immediately. You can see from here in 2022, when the rate hike cycle start to goes up, you see they didn't go up immediately, but you can see that eventually this blue color is the stock market, by the way, the S&P. So you can see eventually they have a very big rise on the stock market. So put it this way, the rate hike are actually or more or less good for the, I would say good for the stock market. All right. Okay. Then after that, after a while, you know, here come the holding of rate. So holding of rate can be quite short and holding of rate can be quite long as well. So it's based on the condition because one case to one case, they are not exactly the same. All right. So the last time, this was quite short. I think it's 8 months, if I'm not wrong, in 2019, because of the COVID also at the time. And another thing is that during this, what we call it, 2005 to 2008, before the great financial crisis, you can see the rate hold was 1 year and 5 months, actually, nearly 1.5, put it this way, 1 year and 5 months. So basically, currently, right, our rate holding period is only 1 year. So basically, to sort of like match the previous time, we still got a few more months to go to. Okay. Anyway, anyway, what I'm trying to say is that the 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 intensity may not be the same. This one take 1.5 years, but this one may 1 year and 5 months. Sorry, this one may take 1 year plus only. Anyway, we have already 1 year already. So I think going forward, I think we are going into the rate cut signal, in my opinion. Okay, so one rate cut, what happened? Okay, so this is a rate. So I think by July or by September, all right. I won't be surprised they cut by July, but anyway, at least by September, if they cut, it will go into the rate, sort of like a rate cut cycle by then. So this is starting of the phase three. All right. So when we go into the phase three, what will really happen? So when it go into the phase three, when the rate start to cut, you can see that the gold will really start to rise. All right. After a while, the gold will pull back, but eventually the gold will rise even further as well. So this is a one case scenario, and another case scenario is you see that in the previous rate cut, also you see the gold really have a up move. So now you can have a so-called rough estimation already. If let's say by July or September the rate start to cut, what do you think the goal is going to happen? Right? So the goal is going to take off to the upside further. Okay, so from the previous three incident that or three so-called phenomenon that we study, the goal are likely to rise a lot higher. Okay, so during the rate cut period, okay, now we have already talked about gold here. During the rate cut period, what really happened to the stock market? Stock market, during the first initial rate cut, there wasn't really so bad, so-called a bad condition, but eventually it will follow by the very big recession. All right. Of course, the same thing during the rate cut. You see, of course, this was the COVID recession per se. So I think we are going into the stock market. They still can go up a little bit higher. All right. But I don't think it will go up a lot already. But eventually, will be followed by the very tough recession on this. So to conclude, once they start cutting the rate, I mean, once they start switching on to this phase number 3, the goal will be more or less to the upside. So please, I mean, prime yourself or position yourself to be more on the gold bullish side. Okay. And same time, once they start this rate, like the phase number 3, the stock market may or very likely to go into the kind of like a recessionary period. Okay, so I mean we have to be careful. But of course, this is the very long-term kind of fundamental thingy. So we cannot really time it like tomorrow. I cannot promise you that tomorrow will drop, next week will drop. Not really this type, but you can see where the market is roughly going by that. Okay, so there's a 2 takeaway from here. Number 1, if they really start this phase number 3, I think gold will shine a lot brighter, and I think stock market will be quite bad. Put it this way. Okay, all right. And during this race, during this so-called phase 3, I missed out something. You can see that this unemployment rate, which is a red color, they also start to take off. So we have already, this is already happening right now. And last Friday have more or less confirming us already. Of course, we cannot see the future, but this is most likely the projection, right? So the unemployment rate is going to climb as well. Okay. So, well, this is what it's going to be. All right, so let's start with the individual pairs together. All right, so something big is coming, and the good part is that I mean, even though it can be not good, right? But we can make money out of it, right? Okay, so let's start with the British pound together. Okay, just to keep in mind, guys, just now what I have explained to you, you guys are okay, understood, guys? So, yeah, this one will be important, guys. All right, so going forward, okay, British pound. Like I say, I don't really have a market composition data until on Tuesday. I will be clearly based on the price action alone. Okay, so what has happened to British pound? So British pound, I will go on, as you know, right side is future, left side is our CFD. So basically what is happening right now is that you see there was a very big volume show up on the 3 weeks ago on the 10th of June. So we have a very big volume on basically on this candle. All right. So what I am expecting is I think market will likely to do here is retest in my opinion. All right. So if you want to short, I think this is 1.285. This kind of level is the only place you can look for a short first. So as of right now, price actually stay quite bullish. So I'm slightly neutral and slightly neutral and slightly bullish. I think the market will likely to go to 1.285 to 1.29 region first. So too early for a short. If there's a short, I will let you know. All right. And there's even though it's I would say too early to short, but there's some good point from the retail traders. The retail traders are too extreme already as well. So very likely market might be rolling over as well. So too early to short, but a little bit late to long as well. Okay. So resistance 1.281, 1.285, this is a level that I just mentioned, and 1.29. 29 also important, so 2 level of resistance. And support 1.275, 1.268, and 1.26. 1.26 is important. So I'm neutral and slightly bullish first. Another one is Euro US dollars. Euro US dollars also quite similar, right? You can see that the market is market is going up higher. Okay, hang on, let me show you. Same thing, left side is CFD, right side is the future. Okay, you can see that there was a very high volume show up here. So we need to see, all right, how they really behave from there. I think market will likely to drift to this swing level first. We are talking about somewhere 1.085086 region. So too early to short as well. I think market will definitely 1 day or 2 day will go up first. So I think maybe by Monday or Tuesday, I think they will sooner or later they will overtake this swing level. So if you want to short, definitely not on Tuesday. Oh, sorry, definitely not on Monday. I think you need to wait around here, in my opinion. So it's neutral or slightly bullish. Resistance 0.8, 0.808, 0.09, sorry, 1.08, 1.09, 1.095. Support 1.079, 1.076, and 1.07. Okay, so let's move on, gentlemen. Okay, another one is Aussie USD. All right. Aussie USD, we have a real nice clean breakout. I think they are in line with those, the commodity are about to go up higher. So market is really trying to break higher. You can see that they are above this volume already. So what it means is that this level have become a good resistance now. So I think the market will likely to drift higher a little bit more, in my opinion, at least. Don't short, I think in the earlier next week. Okay, so I'm also slightly bullish for now. All right. So I think the resistance is 0.676, 0.68, all right, and 0.685. Support 0.671, 0.665, and 0.66. All right. Another one is gold and silver. Okay, last Thursday, I was mentioning that gold are likely to go up higher, even better than silver. But anyway, it is already come true. And our market composition, you can see the numbers are getting higher. Can see the numbers are getting higher, right? 204, 237. So I think the market is definitely were likely to go a lot higher, in my opinion. All right. I was expecting, okay, I have to tell you the truth. I was expecting market will go below, but they didn't go until that low. They just go around 2275, 2280. Then you see they found support already. So I think this guy will drift definitely higher. With the new market composition available by Tuesday, I want to see this number really climb or not. So I think I will write the note here. Hang on. So this data. So new Marco and C higher than this level or not. Okay. Yes. English. Okay. So I will match the data on the this Tuesday, right? Currently is this is just a note, so I'll put it under the red black color. So let's see how it's go. So I put it here, so I will remember. So if let's say the new data come out on Tuesday, if the number is really above, okay, this 237 246 data, it will be really, we have a more bullish so-called confidence by then. All right, I think our market will likely to go to 2.4K or even 2.43K first. Okay, so it's slightly bullish, pretty much. All right. So resistance to 2.4, 2.43, 2.43 is a number that I just mentioned. Another one is 2.45K. Support 2.35, 2.325, and 2.29K. All right. Another one is silver. Okay. Silver also quite bullish. Then the market is really going up higher. You can see the retail number also not so high yet. You see only plus minus 674 only. It mean if they were to go up higher, right? Go up higher, they can become minus 80, minus 90, this kind of stuff. So silver and golds are more or less better than the British pound or euro. Okay, if you want to long anything against US dollars, I repeat, look into silver and gold actually, especially gold, I would say. All right, especially gold. So silver and gold will be my first two KIV pair for this week. Resistance 31.5, 32, 32.5. Support 30.2, 29.5, and 28.6. Okay, let's move on to US dollar Canadian quickly. Okay, US dollar Canadian. I think they are really trying to break lower, but they have a bit of last Friday we have a bit of bounce to the upside. I think market is going back to touch the resistance level, in my opinion. I don't think they will really way past this. So currently I'm neutral, pretty much on the neutral at the moment. I don't think they will way past this level. So this 1.37 is a very strong resistance. Okay, so 1.366, 1.37, 1.374 resistance, support 1.36, 1.358, and 1.35. So I'll be watching more of a neutral. Okay, another one is US dollar CHF. Okay. Okay, US dollar CHF are having bearish for quite a while. I think market will continue to the downtrend more or less. All right, resistance 0.9, 0.904, 0.91. Support 0.9, 0.892, 0.899, 0.888, and 0.884. All right, another one is US dollar JPY, which we have a sell position. Okay, so I'm monitoring quite closely. All right, I'm monitoring quite closely. You can see that this is a future market, by the way. Hang on. Okay, you can see that there was a very good sort of like volume coming in. Right after that, you see market didn't really have anything at all, just drift everything lower and lower, right? But around here we have there's a bit of volume though, but I mean the rest of the days are really nothing, right? But here we have a bit of volume coming in, and last Friday we also have a volume coming in. So to me, we have market participant put it this way, is they are waking up. All right, they are waking up. So I think they are going to go back to this region minimum, in my opinion. So we are talking somewhere around here, possibly. So this will be my first recommended pair for today. I think the market will likely to go lower. All right, go back to where? Of course, go back to this region, like 156 point, 156, 15, sorry, 159.6, this 159.6, 159.7, this kind of region. Okay, so resistance 161, 161.7, 162. 162 is important. Support 160, 160.3, 165.6, and 160.3, 169.6. Okay, this level is important, and 158.9. Okay, sorry, I repeat. 160.3 support, 159.6, and 158.9. Okay, so this will be my first recommended pair for this week. All right, so I think it's going to be interesting. Another one is US market. Okay, US market is going to be, like I said, because of the the rise of the unemployment rate. I think it's going to be very tricky, in my opinion. All right, it is going to be very tricky. Hang on. Okay, where does it go? There we go. Okay, I think it's going to be very tricky. So I'm not really bullish nor bearish at this moment. Okay, so I think they are really trying to digest the data in that US is moving into recession. I think it's a long time coming, a long time coming really. Actually the what we call it, the market start to reflect to the give a signal to the stock market already. Even though how much money they really print, economies start to really jam things up. All right. So how we know economies start to jam things up? Of course, the PMI start to drop. PMI is basically that people are not buying new products, right? So the purchase manager in just so the manager know that people think they're not buying. Of course, they will lower the purchase to produce more, right? So PMI will drop, and of course the housing price will drop. This kind of thing will drop. Okay, so economy is really starting to show the stock market that even though how much money put into the stock market, the economy is slowing down. Okay, so economy slow down. I think eventually the stock market will get a clue. I think by so the stock market will start to drop as well. So this time around, economy lead the stock market. All right, because stock market is so distorted. All right, by right, stock market have to be the first to know the trouble, right? If the market is going to go down, market is going into the sort of like downtrend, the stock market should drop first, right? But now it's another way around. Stock market don't want to drop because so much money in the market, But now the stock market eventually will catch up to the reality. Okay, so I think the stock market especially will be very tough to trade in the near future, in my opinion. And because they are starting to roll over to the downside. Okay, all right, Hong Kong. Unfortunately, they didn't have a good follow-up. So Hong Kong is not really doing well at this moment. And we have position. So at least we don't add position. All right. And let's see whether they can survive or not. But at least don't add position. Okay. So Hong Kong is of course slightly bearish. Resistance 17.9, 18.1, and 18.4. Support 17.7 and 17.5. Okay. Another one is DEX. DEX is a German DEX. I think DEX will have a big impact on Monday. All right, because you can see here. You can see here, we have a Fed chairman to testify on Tuesday. Okay, we have an election result by tomorrow. So I think by tomorrow there will be big hoo-ha, in my opinion. Okay, so I think German DEX will have a very big negative impact likely. And you see they are really going to this trenchy level, right? You can see, I think we are going to see the bearish candles soon. Okay, so you see we have a one time they really go we have like a doji, but they use this to really stop out a lot of people, and I think they're going to go down lower again. So this will be my another KIB for this week. I'm looking into some further bearishness potentially. All right, resistance 18.5, 18.6, 18.8, support 18.3, 18.2K, and 18.1K. So just have a quick recap. I have one recommendation, which is the US dollar JPY short, and I got two, I have one recommendation and I have 3 KIV. Go short, go long, silver long, and German DAX short. So I got one recommendation and 3 KIV. Okay, later we'll go through again. Okay, another one that I would like to bring your attention is just like gold and silver it's a wheat, corn, and soybean. Okay. I will not go through all of them in detail, all right. But they are all pointing into the same direction. Okay. I want you to focus on this guy instead. Okay. I think the corn is really going to rise up a lot higher. They have just done recently which is a nice stop hunting. You can see they go lower than the previous low, right? Then you see now they are going to recover soon, really, in my opinion. So this will be my another KIV for this week as well. All right. So I think market will likely to go a lot higher soon. Okay. Market going to go a lot higher soon. All right. So resistance is 415.7, 425, 430. Support is 405 and 400 level. Okay. Hang on. Okay, another one is Bitcoin. Okay, we have a very big sell on Bitcoin. Okay, unfortunately, I don't really have a market composition data. So I think Bitcoin is sort of like some potential bounce is going on right now. All right. So you can see Bitcoin is really like they really go here and they're really trying to bounce. But nonetheless, just keep in mind, Bitcoin in terms of technical look, they just have this like a sort of like an M kind of thing going on right now. So I would say instead of buying into crypto, you want to buy something against US dollar, you should look for commodity like corn, like, something like that I just mentioned. Bitcoin, try not to buy a lot at this moment. All right. And I try to look back through this, what the Bitcoin performed during this rate cut, this kind of thing. But because since the Bitcoin is kind of like a very new product, it's only, like become popular for less than last 5 to 8 years. So there's not much of the reliable data relation there. Okay. So my point is that, my point is that Bitcoin, I'm not really so eager at this moment. Okay. So instead of, if you want to buy against anything against US dollars, look for other things. Okay. Look for other things. Okay. All right. So Bitcoin, I will be more of like neutral, this kind of stuff. Resistance 58.9, 61, 63, support 56 and 51K. Okay, another one is the next gas. Another gas is also like a bit of a crazy market at this moment. Okay, I'm expecting NASDAQ will turn around soon, but of course, I'm waiting for that. Right, let's see, maybe it turn around somewhere around 2.198 or not. Okay, so NASDAQ is no hurry to long as well. I'm more of neutral or slightly bearish. I think the market will show more signs later, in my opinion. Resistance 2.3, 2.5, 2.6, support 2.1, 2, and 1.9. Okay, just let me have just a quick recap. I have a one recommendation, which is US dollar JPY to the short side. Okay. And I have 1, 2, 3, 4 KIV. All right. So which are they? So number one is a gold to the buy side. Number 2 is a silver to the buy side. Number 3 is German index to the downside. And number 4 is corn to the buy side. So if you a little bit kind of like aggregate them up, right? Gold long, silver long, and corn long are basically the same. All right. So please be aware of that. I mean, if you buy 3, one right, all will be right, but one wrong, all can go wrong as well. So please be aware of the risk involved, gentlemen. So this is all I have for today. All right, this is all I have for today. Just to keep in mind, I will be waiting for our market composition to release by earlier next week. And of course, I will add accordingly, or I will adjust my view accordingly if there's any big change based on that data that released on, I think, on Tuesday. Okay. So of course, I will let you guys know, and you guys will be the first to aware of is there any changes. Okay. So guys, thank you very much. Let me handing over to Brozo. All right, then yeah, see what he have to talk about his stock market and stuff.